Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Today guys we will take a look at the euro currency again. Sorry, I've catch a cold a bit. So the situation around the euro right now and in general in the euro union is very sophisticated, as from the economical as from the political point of view, and we have made some comments on these subjects in our weekly research. So speaking on the financial sphere, there are some tensions about Greece, so you know that some the sides of this tension searched for compromises, because Greece needs the liquidity, Greece needs the financial from the current operations and current in the short-term perspective of the economy, while European Union needs to acceptance of the Greece, the burden of the debt, and the logical results on and logical offers how Greece intends to make the payment on this debt. So and there is some tensions exist and risks exist around this talks around this dispute, because from the one point of view, there is a party before the elections have made very brave talks on the financial independence on the Greece, and they talk about the possible refusing of the debt and previous debt that was given to the Greece. But right now, when they meet with the reality, they understand that they have to search the compromises to keep the financial, to keep the economy working. But at the same time, there is some red line exists between the Greece acceptance and the demands that come from the creditors club in the Europe, because Greece also understand that in fact they have not financial independence, because they can't print euros. In fact they do not have the tool how to regulate the economy, how to regulate liquidity. They do not have the tools for this, and these tools stands in the hands of the European Central Bank. And from that standpoint, I think that there's exists some age of the Greece patient, and when this age will be passed, the Greece really could take some radical steps, and this is the major risk right now in the Europe and the financial sphere. As you can see, euro has shown really significant volatility based on this situation. So you can see that initially rate has jumped up, then dropped when European Central Bank has denied to accept Greece bonds as the collateral for the providing long and short-term liquidity. Then they have come to some agreement, and this again raised again. The last drop was due to the non-farm payrolls release. From the geopolitical point of view, Europe now stands also is very sophisticated situation, and on the top of this iceberg we see the dispute between the United States and Europe concerning the delivery of the lethal weapon to the Ukraine, because Germany do not want to do this, and the United States has the opposite position. They would like to do this, and it's really very big moment stands at the breakout of this dispute, because if United States will ignore the position of the Germany and will put the weapon to the Ukraine, that could bring some flaws and the tensions inside of the NATO bloc, and that's not very good sign. From the other point of view, if United States will not fulfill their promises to the Ukraine, will not to make the delivery of this weapon, this will look like the side of the step of the weakness, this weakness event, and this also will not be good for United States. That's why you can see there's some contradiction exist based on this situation, because they should come to agreement on this delivery very fast, since situation on the front between the southeast and Ukraine and the Poroshenko army stands in a very difficult situation. This question should be resolved very fast, and maybe particular to this moment, Holland and Merkel have come to the Moscow for a conversation. So as you can see, situation right now is very difficult around the euro currency and around Europe in general. But from the technical point of view, we think that chances on the retracement on the euro currency still exist, because market right now stands, it's a bit overextended to the downside. The recent CFTC data shows that 84% of the all market position stands in the short side of the market. Also, market stands at very significant support on the monthly chart, and that could be a reason for upward retracement in the short-term perspective. In the longer-term perspective, we think that downward action probably will continue, and we could see the parity in the current year on the euro currency. Recent non-farm payrolls release shows the major surprise comes not even from the numbers on the unemployment, but on the new job created, but on the inflation. Because recent non-farm payrolls release shows that the wage cost increased for the 20 cents in the last month. That approximately 2.2% of the inflation on year-on-year basis, and that's really very big. A very big jump compared to the previous month when the data showed the 5 cents decreasing of the wage value. So that's why this has become the reason for this significant drop down. Still, as you can see here, even we neglect the fundamental part, we see that from the technical point of view, euro also wasn't able to pass through this level from this 50 area, because that was really strong resistance daily overbought, accompanied with the monthly pivot point. And on Friday we also said that hardly market will pass through this area only if the non-farm payrolls will be very bad. So that has happened and market has dropped down. But still, at the same time, this is also the positive sign for us, because we continue to monitor for a possible double repo buy pattern here. So right now we have the close above the 3x3 moving average, that's the green line. Now we have the close below. All that we need is the relatively comparable second bottom of the double repo. And after that, the close of the 3x3 moving average again. That will be the confirmation candle for the double repo. The chances that the market will continue to move lower exist, because if you take a look at the hourly chart, you see that we have some sort of the double top pattern. This drop was really fast, and that's very typical for the double top. The target of this double top will stand somewhere around the previous lows. Maybe market will stop somewhere around it. Maybe it will show the wash and rinse of these lows. This is not very important, although wash and rinse is preferable. But still, the appearance of this double top pattern hints that market could drop a bit further in the short-term perspective on the intraday charts. And that is a positive sign for us, because in this case we will get relatively equal bottoms of the double repo. And this is a positive sign for the double repo when it has approximately equal bottoms. That's very good. So if you're a scalp trader and you have the bearish view on the euro currency, you could try to think on trading on this pattern. Currently it's very difficult to say whether the market will try to test the weekly pivot point before it will move lower or not. But if this will happen, we could try to use this level as weekly pivot point 1380 in the coming week. Maybe you could think about taking short position somewhere in this area if you would like to trade this pattern. But for us guys, for those who trade on the daily chart, the major pattern that we are waiting for is the double repo buy here. That will let us to take the long position on daily time or a possible retracement up. The minimum target of this retracement will be approximately at 118.50, approximately here, the 50% resistance of this thrust down. So that's what we'll be watching for on the euro currency in the nearest future. Let's see how it will turn.